Welcome, Bitcoin fam, to the #1 Bitcoin pod. Saylor just dropped the bombshell. He says the Bitcoin price is being artificially suppressed by the shadow banking system through rehypothecation and synthetic supply. In fact, I'll be breaking down his latest analysis of why he feels Bitcoin failed to surpass $126,000. We'll also discuss U.S. Bitcoin reserve still has no plan to stack sats. What's going on, Trump? Let's get some movement already. We'll also discuss Bitcoin now a main player in the global energy war. We'll also discuss stablecoin inflows rebound to 1.7 billion as Washington battles over the yield rules. Also be breaking down the latest flows of the ETFs as well as technical analysis. We'll also be taking a look at the overall crypto market. All this plus so much more right here in today's show. Let's kick it off, diving into our feature story of the day. Michael Saylor says the Bitcoin price is suppressed by the shadow banking rehypothecation. That's right. I'm going to actually do a deep dive. He was actually just recently interviewed on Natalie Brunell's Coin Stories podcast. Shadow banking rehypothecation suppresses the Bitcoin price. This is a brand new interview last week, February 27th. Natalie Brunell asked Michael Saylor why Bitcoin failed to surpass 126,000. He suggested the exclusion of Bitcoin from traditional banks like JP Morgan forces investors into the shadow banking. These entities often rehypothecate collateral by selling it multiple times, creating artificial selling pressure that suppresses the price. But let's hear it directly from Mr. Saylor.
What do you say to those out there who feel disappointed by the bull market that we didn't go higher than 126,000? And what is your reasoning for why we didn't get to maybe some of those price predictions that a lot of people wanted?
So if you had $1.8 trillion or more than $1 trillion worth of capital and no one would give you a loan on it, then how do you monetize it? If I posted $10 million of Apple stock with JP Morgan or Morgan Stanley, I could take a $5 million loan at SOFR plus 50 basis points and I could spend it. But you can't even post $10 million worth of Bitcoin with JP Morgan or Morgan Stanley right now. Therefore, you can't take a loan. Therefore, you have to go to a shadow banking system. You have to go offshore. So how would you actually monetize it? You either have to sell it, right? The safe way is to sell it, but that damps the upside. Okay, so what's holding down the price? I think what holds down the price of the asset is the lack of a fully formed, non-rehypothecating credit system. There's a limit to how much you can rehypothecate certain other assets. When you post your home as collateral for a mortgage, the bank doesn't turn around and sell the house on your street 10 times. If they did, the price of houses on your street would be lower. I think the lack of a fully formed banking system holds the price back.
Well, there you go. That's what's holding the Bitcoin price back, according to Michael Saylor. And we can dive a little deeper as this article is just published on the topic. So yeah, Saylor frame, Bitcoin structure is roughly 2 trillion worth of Bitcoin, with probably 1.8 trillion being held by the retail investors or offshore investors who cannot access to the traditional banking system. The practical implication, he says, is that Bitcoin holders who want to unlock liquidity face the narrow menu compared to traditional equity portfolios. Quoting him here from the interview, if I posted 10 million of Apple stock with JP Morgan or Morgan Stanley, I can take a $5 million loan at SOFR plus 50 basis points and I can spend it. But you can't even post 10 million worth of Bitcoin with JP Morgan or Morgan Stanley right now. Therefore, you cannot take a loan. Therefore, you have to go to the shadow banking system. You have to go offshore. That constraint, he argues, forces the holders into behavior that mechanically caps the Bitcoin upside. The safe way, he says, to monetize is simply to sell, which damps the upside. The next option is borrowing from a small pool of crypto lenders that don't rehypothecate the collateral. But Saylor described that market as both expensive and shallow. A few $1 billion, probably, with rates he characterized as closer to an SOFR plus 400 or plus 500 basis points rather than traditional prime style spreads. He pointed to a newer channel, banks extending credit against spot Bitcoin ETFs, such as BlackRock's IBIT, but described it as early, limited, and still costly versus conventional secured lending. The most controversial pathway, according to Saylor, is where the cheapest funding appears. The counterparties offering the low-rate Bitcoin-backed credit in exchange for control of the collateral. He says, I've had people offer me Bitcoin-backed credit at 1% or 0%. Damn, where do we get these deals? He said, before emphasizing the trade-off, there's always a catch. They want me to transfer the Bitcoin to them so they can rehypothecate it. Well, exactly. They want the collateral. Now, Saylor then tied rehypothecation directly to the spot market suppression, in which he argues collateral handed to intermediaries can effectively be sold multiple times and be reused, just like fractional reserve banking. When you deposit dollars into the bank, they can lend it out at a factor of 10x of what they actually have. Same concept. So he says, if you have 10 million, you can get 3 or 4% loan, but then it gets rehypothecated, he said. So your 10 million of Bitcoin gets sold one time, then gets sold twice, and then 3 times. You might actually create 30 or 40 million worth of selling because that Bitcoin that you posted was rehypothecated 3 times. That's a great example. So in his view, Saylor says the missing piece is a large, regulated, non-rehypothecating credit system for Bitcoin, one that looks more like mainstream securities financing. What's holding down the price? He says, I think what's holding down the price of the asset is the lack of a fully formed, non-rehypothecating credit system. He said adding rehypothecation dampens the volume and can amplify the moves on both sides through the leverage positioning. Saylor's bottom line, timing, not thesis. If the banks take 4 years, 5, 6 years to bank it in the full sense, then Bitcoin price discovery will continue to be shaped by a shadow credit workaround that can manufacture a synthetic supply. And if and when conventional credit rails mature around the Bitcoin collateral without the aggressive rehypothecation, he suggests the market then may rely less on forced selling and more on ordinary secured borrowing, potentially changing the ceiling of the upside cycle. And there you go, yo. Let me know if you agree or disagree with Mr. Saylor. And we'll go from there. Shout out Natalie Brunell, Coin Stories podcast. Of course, that clip was taken from there. Next big story of the day. U.S. Bitcoin Reserve still has no plan to stack sats. What's going on? How long ago was that executive order for the strategic Bitcoin Reserve signed by our POTUS? It's been a hot minute and no movement. So let's see what's going on. 1 year ago, Trump signed the executive order establishing the strategic crypto stockpile. 1 year later, the value has decreased by billions. Well, we've had a massive correction there, right? At the beginning of the administration, Trump formed a working group to study how the government could best implement and regulate crypto. This included the Bitcoin and crypto reserves. Much has happened since. The first year of the Trump admin brought a number of macroeconomic and policy changes. Some of these, like new friendly regulations from Washington, have been good for crypto. Others, like punitive tariffs and geopolitical escalation, have not. Now, the U.S. crypto stockpile sits with its token reserves largely unchanged since it was established. So March 6th, it all began. Trump formed the Strategic Bitcoin Reserve and U.S. Digital Asset Stockpile with the executive order, which I'm sure everyone here remembers. This was literally a year ago. The Bitcoin Reserve would comprise solely of Bitcoin, while the crypto stockpile would be diverse collection of alts, which was like XRP, Solana, and Cardano. This was the original tweet from Trump literally a year ago. Timestamp March 2nd, 2025. He wrote, a U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order on digital assets directed the presidential working group to move forward on a crypto strategic reserve, which includes XRP, Solana, and Cardano. I will make sure the U.S. is the crypto capital of the world. We are making America great again. Both would not acquire additional assets for the U.S. digital asset stockpile beyond those obtained through forfeiture proceedings, meaning they have to steal the crypto from the criminals. That's just how it works. Criminals steal the crypto from the good guys, then the government steals the crypto from the bad guys. The order effectively consolidated the forfeited assets, which at the time were spread across many different federal, regulatory, and law enforcement agencies. According to the order, it would also create the opportunity for the government to capitalize on the seized crypto, quoting it here, taking affirmative steps to centralize the ownership, control, and management of these assets assets within the federal government will ensure the proper oversight, accurate tracking, and a cohesive approach to managing the government's crypto holdings. According to the order, the government does not publish the exact details of either the Bitcoin reserve or the crypto asset stockpile. However, Arcam Research has identified several blockchain wallets associated with the U.S. government. I find this interesting, so check this out. At this time, the government crypto holdings are valued at, it looks like $22 billion. Of which alone is Bitcoin. Other major holdings are Stablecoin, USDC, Ether, Wrap Bitcoin, and BNB. And here are most of the U.S. crypto holdings of the U.S. government. You can see primarily made up of Bitcoin. As you can see here, they currently have 328,372 Bitcoin, not even half of what publicly traded company Michael Saylor Strategy has on their balance sheet. And then next up, Ether. You'll notice they have 62,000 ETH valued at 129 million, and then USDT, Wrap Bitcoin, BNB, and the list goes on. How much of these assets constitute the formal stockpile itself, or how and whether they were moved is not public information, of course, but the dollar value has fallen significantly. According to Arcam, the U.S. cumulative holdings were worth $300 billion when Trump signed the order, but at this time it's $22 billion, which is roughly a 26% decrease. The White House appears unshaken by this. Deputy Press Cush, what a great name, said regarding the recent price volatility in a free market in which the government does not set the prices is not going to change the Trump admin's commitment to ensuring American dominance in crypto and other cutting-edge technologies of the future. Despite hopes for the Bitcoin maxis that the U.S. would start buying Bitcoin, the balance remains unchanged. Since the executive order, it's showing 328,272 BTC. And then I already shared with you with Ether, and you can see Tether, USDT. Quoting the crypto czar David Sachs, it won't cost the taxpayer dimes, but if the secretaries can figure out how to accumulate more Bitcoin without costing taxpayers anything, then they're authorized to do that, which means if there's a net neutral way for them to accumulate Bitcoin on the balance sheet for the strategic Bitcoin reserve, the executive order allows for that. And there are various different, creative ways to do so. In fact, I remember Saylor issued a report to the White House. He was there alongside, probably like, yo, here's 10,000 different ways we can acquire Bitcoin. We can sell off our gold reserves. Apparently, there's supposed to be gold at Fort Knox, but we all know there's probably nothing there, according to the Epstein drop. Just saying. But anyways, ensuring transparency through independent audits and public reporting is crucial for fostering innovation instead of favoritism. And we all know favoritism rules the world, aka Epstein's clients. But that's a topic for another conversation. And of course, there's a lot of countries now that hold Bitcoin outside the U.S., which include Bitcoin Country, El Salvador, China, Ukraine, United Kingdom, North Korea. And the question remains, when will Trump and the administration take advantage of this Bitcoin executive order, start stockpiling some Bitcoins already for the country, for our future, for our children? Otherwise, what are we going to do? Next deep dive here. Bitcoin now a main player in the global energy war. Energy wars, that's right. Bitcoin is meant to be apolitical. Doesn't take sides because it can't. Its task is to continue producing blocks every 10 minutes, maintain a full record of all the historical transactions. And for the past 16 years, it has done that very well. And just because Bitcoin as a tech, it's neutral, doesn't mean the Bitcoin as an asset is neutral. As governments increasingly weaponize energy markets, Bitcoin's transformation from a neutral protocol into a strategic geopolitical asset accelerating far faster than observers even realize. It's subject to the same political forces which are brought to bear on the ostensibly neutral assets, for example, oil, whose supply and demand pits nation states against one another. That's why we're always going to war. Both assets, after all, are synonymous with energy. Oil, which powers the automotive manufacturing industries, and Bitcoin, whose proof of work consumes vast amounts of energy. It was therefore inevitable that once nations began circling the Bitcoin, it would become a casualty of the global energy arms race. The creation of the strategic Bitcoin reserve, coupled with government support for mining in countries with excess energy capacity, has placed Bitcoin on the front lines as a global resource war. Hash power is a new soft power for countries intending on becoming superpowers. Bitcoin is now in the crosshairs of the nations of all sizes. In the past, governments attacked it. Now they're attempting to enlist it as a defensive weapon in a resource war that may define the next 2 decades of human struggle. The quest for absolute power. The energy arms race is a scramble, not a gamble, for the dominance of the world, where the power generation is literal and figurative. Nations flush surplus electricity from renewables and underutilized fossil fuels, which has nothing to do with fossils, which are increasingly channeling that excess into the Bitcoin mining, whose annual energy consumption runs at 5 to 7x that of Google, which is 38% of which is derived from renewables. And around the world, excess electricity is increasingly being used for Bitcoin mining. From Ethiopia, where authorities have officially authorized the use of excess hydropower to attract foreign mining companies. In fact, I know Putin, Russia launched a mining company in Ethiopia, probably due to the, cheap energy prices. And also I heard Iran was doing 5% of the total global hashing, which probably all just changed with us bombing them, you know what I mean? But what was once a hobby for the tech libertarians, bitterly opposed to big government, has been commoditized into a state-sponsored industrial policy where the hash power serves as a proxy for geopolitical clout, and where states compete for a finite resource. Politicking abounds, including China accusing the U.S. of hacking the mining pools. So the battle with Bitcoin, the establishment of a national reserve of any asset introduces a risk for its use for political purposes and the potential to distort market dynamics. Indeed, there are clear parallels between a strategic Bitcoin reserve and a strategic petroleum reserve, which have faced accusations of being used for short-term political gain. For example, by releasing the oil to the lower gas prices ahead of an election. Should Bitcoin succumb to the same fate? The front runners in the race are clear. The United States, leveraging its abundant renewables, now commands 37% of the global hash rate. Texas alone, with its wind-swept plains, produced surplus of 3 to 4 cent kilowatts during off-peak hours, hosts mega farms that could power a city for $1 million. Russia follows at 16% with the coal-heavy grids, which account for half of the energy repurposed for the mining amidst the Soviet energy gluts. You know what I mean? We also have places like Norway and Iceland, powered by nearly 100% hydro and geothermal. And speaking of El Salvador, they famously mined 474 Bitcoin using the volcano-fueled geothermal power plant. France, eyeing the nuclear surplus, is piloting a 5-year program to divert excess nuclear output to mining, potentially adding 5 to 10% to Europe's hash rate share. So yeah, this is the global hash war playing out in real time. I believe the future of energy is free energy. I know it's conspiracy theory to most of you, but wasn't everything once a conspiracy theory until you guys realize the truth and see through the veil of the matrix? Here's the deal. Nikola Tesla, long time ago, back when he was alive, discovered free energy. Free energy means we don't need the alleged fossil fuels, which don't come from fossils to begin with. There's surplus energy into the ether you can tap into. And it's suppressed by big government because there's a monopoly on oil. You know, the Rockefeller Foundation, John D. Rockefeller discovers Standard Oil in the early 1900s. Free energy has been suppressed ever since. But my question, what if free energy is like a genie out the bottle and they can no longer suppress it and energy becomes free? How would that impact, the hash power and what's going on with the Bitcoin mining? Let me know your thoughts. I believe the geothermal and the free energy is the future. The old ways with the oil, outdated over 100 years, but it's still intact due to the forces of evil in power that control the oil markets. Next story of the day, bro. Stablecoin inflows rebound. 1.7 billion as Washington is battling over the yield rules, and the crowd is going wild. Weekly net stablecoin inflows rebounded last week like a young Dennis Rodman. On-chain activity picked up while the U.S. lawmakers and banking groups sparred over whether third parties should be allowed to pay the stablecoin yield, according to the latest report from Masari. Weekly net stablecoin inflows accelerated to $1.7 billion, a 400% increase week on week. The recovery also flipped the 30-day average to a positive 162 million of daily inflows. Transaction volumes also rose 6.3%, while the average transaction size continued to decline, reflecting renewed stablecoin issuance demand and strengthened on-chain activity amid the retail investors. Stablecoin inflows tracked the net new stablecoins entering circulation after accounting for redemptions. The surge follows a weaker period earlier in the year. Masari data showed 249 million of weekly inflows 2 weeks earlier and 4.4 billion in net outflows over the 30 days leading up to February 18th. So the stablecoin yield debate stalls the U.S. market structure bill. Yesterday, we did a deep dive actually into this whole thing. We read the entire Donald Trump post, the response from Eric Trump and all that. But yeah, the renewed demand comes as debate in Washington has sharpened over the yield-bearing stablecoins. Banking groups have argued that allowing stablecoin issuer affiliates to pay yield would create the loophole that could pull deposits away from the banks. That's precisely what it will do. We're not stupid. And have argued lawmakers to restrict the practice as they negotiate a broader crypto market structure bill. So clearly the banking institutions and banksters, JP Morgans and Jamie Dimons, are against that. The Digital Asset Market Structure Clarity Act is designed to provide a clear regulatory framework for the digital assets. The House of Reps passed the measure July 17, 2025, but it's still under debate in the Senate ever since. How will it play out is the question. Separately, we got the Genius Act, which also passed by the House alongside the Clarity Act back in July last year. It's a federal framework for regulating the stablecoins. It prohibits issuers from paying interest or yield solely on holding a payment stablecoin. Third-party platforms can still offer reward programs tied to stablecoin balances. Genius was signed into law by Trump back on July 18th, 2025. And right now, there's like no movement. What's going to happen? And some big crypto proponents are saying these bills are heavily flawed for crypto adoption to begin with, including Brian Armstrong, CEO of Coinbase. He says is very unfavorable. He's completely against it. I heard Charles Hoskinson say something similar. So, they're up to no good. Shenanigans, clearly. So be careful. You got to read these things. All right, fam. Bitcoin bears annihilated as analysis sees 65,000 support tests next. Oh, no. 65 Gs. The current bottom for the cycle, by the way, was a couple of weeks ago. We hit the 59.9, so we could practically say it was 60,000 if we round. And yesterday we hit a high of 73. Currently we're correcting, currently just above 71. But where's the Bitcoin price likely to go next? Let's do some TA. Check it out. Analysts wrote, now the entire market scenario has changed. 73, 75. We have a large liquidity zone, which could be swept, potentially leading to even higher levels. However, 65 to 71 below has roughly 4x more liquidity built up, making it more likely of a zone from a liquidity perspective to be visited next. The bulls just took back the control. That's what's up. A support test sooner or later would be healthy, but I'm not sure that the market is going to make it that easy on us. However, if this develops, in my opinion, the longer it takes to grind up, the more durable the rally will likely be. So ultimately saying slow and steady wins the race. Also, the analyst wrote, nonetheless, warn long-term bearish signals remain in place, expecting the Bitcoin next leg down to result on the current setup. Let me know if you agree or disagree. Also, the Kabisi letter points out here, investors are pouring money into the U.S. funds at a record pace. U.S. listed ETFs, as you know, they pulled in a lot. We had a nice reversal, which I already covered. And doing a quick little market recap here, looking at coinmarketcap.com. Current crypto market cap is down today 3%, but we did gain significantly yesterday. And Bitcoin specific market cap, today, we're sitting at 1.425 trillion. Checking out the Crypto Greed and Fear Index, we're at 22 in extreme fear. Yesterday, we were down to a 10. Last week, an 11, and last month, a 17. And checking out the infamous time chain calendar. Today is block height 939,475. And you could exchange one fiat monopoly dollar for 1,403 sats. So you know precisely what to do. Pick up the sats, pick up a couple of gats, and pick up a couple of Bitcoin caps from my man Sergio over at bitcoincaps.net. You feel me? And if you're watching on the YouTube right now, I strongly encourage you to visit the Rumble. The direct link is bitcoinnewsalerts.net for the full uncensored episode and to participate in the live Q&A.